PCE inflation just in emergency video. We need to cover off what does this mean for the Bitcoin price. Bitcoin falling 0.72% here on the day. It's a bit of a mixed bag, and remember, PCE inflation is the preferred measure of inflation for the FOMC, for the Fed. The FOMC meeting is on the 3rd of May. That's next week. We will be covering that off together. What rate hike will we get, and what will we get for the future meeting thereafter? That is what the market cares about. Let's jump straight in because there's a lot to get through. Smash the like. Don't forget to subscribe if you want to trade any of these moves. Bybit, Binance, the two platforms I use. Those are affiliate links and they support the channel. Now, headline inflation. This is PCE headline inflation. Came in at 4.2 versus the 4.5 expected. That is good news. If we then notch down to the monthly figures, 0.1 versus 0.3 expected. Very good news. On the month-on-month, remember, this is the run rate, right? If they're expecting 0.3, basically if you times that by 12, they're saying that 3.6% is the rate you're running at in terms of inflation. But by coming in at 0.1, that is showing that you're running currently at an annualized PCE inflation headline of 1.2%. So that's much better than the 3.6 they were insinuating with the 0.3 expectation. So the headline figures came out good. So then why are the market a little bit annoyed? Well, you got to delve deeper into it, guys. You got to look at the core figures, and the core figures are which leaves a little bit more to be desired. Markets were expecting this to come in at 4.5. That would have been a decent little notch down from the 4.68 we received previously. It came in at 4.6. So slightly hotter than expected on the core reading for PCE. Now, the reason this is annoying is the market didn't really price in much of a dip. It was just saying go from 4.68 to 4.6, to 4.5, sorry. But it couldn't even reach that. It just dropped to 4.6. So it's showing stubborn inflation here. And for the last 4 months now, we've pretty much been at 4.6 on the core PCE reading. Then when you notch down to the month-on-month figures, this also could have left a bit more to be desired. 0.3% was the consensus estimate, and it came in at 0.3. So this is showing that the core inflation, their core inflation piece that is month on month, is running at an annualized rate of 3.6%. So still quite a lot there left to do. And that could now lead people to start pricing in more pain as far as Jerome Powell. Is he now left with no choice but to continue rate hiking? Well, if you jump on over to the Fed Rate Monitor tool, you can see that this is all but confirmed that next week we are pretty much nailing the coffin, gonna get that 25 basis points. There's very, very slim chance here he decides to pause next week, given that inflation isn't meaningfully coming down on the PCE, which is their preferred measure, right? It's their favorite measure that they like to use. But now look, it's also adjusted now the percentage that is being priced in for the meeting after, which is June the 14th. So many people were expecting that the Fed would come in, they would hike in May and then go away, right? They're going to hike in May, do their final 25 base points, and then we can see a pause at the next meeting. Now, the majority of the market still thinks that's the case. 62% of the market expects we're going to get our 25 base points, and they're pricing in a pause at the next meeting. But look at this. 28, almost 30% of the market now is pricing in we could have another 25 basis points. Okay, and this is the shift now we're seeing in the market, and the market is going to have to price that in. That, coupled with some bad earnings coming out, we can see that the traditional markets are opening up slightly red here today. You can also see Bitcoin obviously following suit, a little bit red here today as well. What are the key levels we need to watch out for? Well, the patterns remain very, very similar, right? If you look at where we're at, I said that on this move, we have to get above that 31 level on Bitcoin. We have to. We have no choice. If I zoom out here, we have no choice but to eclipse that point there where we got rejected. Why? Because when we go up to the daily chart, let's pull out that EMA ribbon. What do you notice? If you made it this far into the video and you someday want to be able to read the markets, do technical analysis, trade as we are doing on this channel, then perhaps you may want to check out my free technical analysis from scratch course over on Skillshare. For those who aren't familiar, Skillshare is an online education platform. You sign up for a nominal amount each month and you get access to a wide variety of different courses. I personally use it to learn all sorts of things, from video editing to financial to using Excel and various other bits and pieces that you may want to learn. It's far better than YouTube on those elements, because on YouTube everything is about retention, whereas with a course you can put things in a structured curriculum, and that is exactly what I've done with my TA course. It's completely free for the first 30 days. If you click the link in the description, ijaz.uk/TA, to take advantage of the TA course. Let me know what you think about it, and let's get back into this video. You notice that we bounced from our EMA ribbon. We spoke about this. Fine. But this bounce is meaningless if we cannot go and follow this up with a higher high, about here where my cursor is. We've got to go and get above 31. Then you can come back down, touch the EMA ribbon again, go back up again, create higher highs, higher lows, and we keep our upward trend momentum going. But if we fail, this is not a good look. We got rejected here, we moved to the sideways. We broke up to 31, got rejected heavily. Go back up. If we're to get rejected again, this could spell a reversal pattern with a bigger retracement here to the downside, closer to that 25 level. And why do I say that 25 level? Because the 25 level is where our weekly EMA support comes in. 25, 26,000 is that level where we start to touch that weekly EMA ribbon here on the weekly chart. So on the daily, we've got to go and get past 31. Everything else is meaningless, right? Even if we have a little call off, we've got to push back quickly on the next set of candlesticks and get above 31. Very, very important. I cannot emphasize that enough. What else do you notice? Exactly what we expected here was playing out. We came back down, we touched our golden pocket on the Fibonacci ratios, we bounced back up. Now we're at this 0.786 level where my cursor is, okay? We're at this golden ratio. Now what could happen here is we could do exactly what my arrow is suggesting. Come back round, retest, and then boom, break through that 31. That is what we need to happen. Unfortunately, the PCE data isn't completely bullish. It's not completely horrible. It's not a disaster PCE reading, but it leaves a little to be desired for, and it could leave enough gap for Jerome Powell to do more than one rate hike, and the market's going to have to digest that. Now, another thing we need to be looking out here is the Bitcoin dominance. If you haven't seen my Twitter page, make sure you're following me at Ijaz. I put a very important thread on this earlier today. And the reason this is critical is on the dominance chart, look at what we are forming. We are creating a very important candlestick here, a weekly candlestick that is breaking through 48% on the dominance level mark. Now, why is this significant? Well, obviously, you can see we've been rejected many times by this 48% mark. But what I want to do is I want to go back previously. And if you look at the last time we broke through 48 on the ascendancy, not on the way down, on the ascendancy was here. And it dates all the way back to July the 18th. And then what did we see? We then saw this was the starting point of a massive leg up in dominance, which ultimately finished in the high in the 70s, right? It broke us past 70% on Bitcoin dominance. This is a big move in dominance. So what we could be seeing here is if we get a break of this level and a retest, maybe we get a break, maybe we come back down like this and then go for another leg, we could be seeing the next leg up to 52% and 59% on the dominance, and that could spell another Bitcoin powerful led move. Remember, Bitcoin moves first, all coins move later. That tends to be what history suggests. History doesn't repeat, but it does rhyme. So that is what we're looking out for, and this could be the next leg up. Now, of course, we do have certain issues in the macroeconomy which we have to get through, right? Inflation being one of them. We had bad GDP reading as well. So all eyes will be on the FOMC meeting next week. On the one hand, Jerome Powell needs to make a decision that, oh no, GDP is now coming less than expected, right? It wasn't a great reading, 1.1% on GDP. Am I going to ruin this economy? Am I going to throw us into recession? On the other hand, core inflation wasn't coming down meaningfully enough. He's stuck between a rock and a hard place, and he's going to have to make a decision. If he sticks to that 25 basis points and we get a pause in June, I think markets will be comfortable for that. But I think now the narrative is going to change away from when do we pause to when do we get our first cut? Because the cut is what's going to indicate the next spike up in risk on assets, and that's what I'm looking forward to. At that moment, that's when I personally want to be all in on risk on assets. Let me know what are you guys doing in the market. If you appreciate this quick emergency update, as soon as the data comes out, smash up likes. Don't forget to subscribe so I can see what type of videos you're liking. And I'll see you in